getting tricky Nicky? Is he going to sneak
Yeah,
in here on us?
I don't know. He usually does. I see his.
Yeah, he hasn't snuck in on us
Good
yet,
morning.
though. Oh, he did sneak in on us. There's tricky Nicky. How you doing?
You guys are late. You're like
We're
1 minute
late.
late.
We're
Brianna.
late. Well, we'll keep you on for an
Brianna.
extra minute here, Nick. We need your overall market thoughts to start with here, though, as we are only about 10 points off of the all-time high in the S&P futures here. What are you looking at?
I'm looking at building some balancing portfolios. If anybody is strictly long, they should probably start looking at balancing portfolios because even all the exuberant guys and gals out there are starting to talk nicey on a possible drawdown at some point in time. So we are at all-time highs everywhere. I put it in stupid terms the other day. I said, if an alien comes down here and says, what can I buy that's cheap? Not on valuation, just on relative terms as far as price action. And it's almost everything is at all-time highs here and abroad, except for a few spotty areas. So it's hard to justify huge run-ups from here without a positive catalyst. I mean, where is the positive catalyst coming from? I'm not saying Apple is expensive, for example. I'll use Apple as an example because it's a good value. It's a great company. It should have good prospects going down the pipe. But at these levels, it's hard to justify a lot of movement upward fast, and it's easier to justify some movement downwards a little bit. And it's hard for me to follow it this high up, the whole market in general too. And it's too hot to short too tightly. So short at your own risk, especially this week. It is set up for a bullish week. How hesitant are they going to be, the bulls, to take advantage of that setup? I'm not sure. They're not showing a lot of gumption here, and definitely lack of conviction in both cases, the bulls and the bears. So it's kind of, you look at your portfolio, you see if it's balanced. You visualize a worst case scenario, how will that affect your pocket tomorrow? And a best case scenario, how will that affect your pocket? And if you don't throw up on either cases, then you're kind of okay. The unscientific method to make sure that your portfolio is balanced.
Any key levels that you're looking at, for confirmation? I mean, we've hit a resistance level, very, very well defined here, just ahead of the all-time high in the June S&Ps. Now on the downside, you got an interesting level too. You had yesterday's low at 93 and a quarter, the intraday low from Friday at 92 and a quarter, hit 91.75 today. Would that be enough, or is that too tight to proclaim this move over?
The open interest is showing a wishy-washy area between 2075 and 2110. This is where both bull and bears can go back and forth. Anything above 2110 is almost purely resistance. It gets really steep at 2140-50. A good strong resistance support at 2050 to 2075. But anything in between can go either way at any point in time. There should be a magnet around 2100, which will act as a resistance on the way down, support on the way down and resistance on the way up. But there's nothing clear, no clear line that they're going to hunt that's obvious from the open interest. From my perspective is we're playing with fire here. I mean, the bulls have all the setups every week, and they timidly walk through and then backtrack a little bit.
So looking for more of a trading range. Okay.
Yeah, so iron condors, if somebody wants to sell spreads, will work well. Like if you sold the 2050, 2045 late last week for this week, you booked the profit. If you sold higher up, the 2050, 65, 2030, 2035, depends on what level you're at, and the SVX I'm speaking, then you can book a profit this week. But doing it within the same week leaves you open when you do credit spreads to blowups. And if you want to do it a little safer, you go out in time and you set them up higher, further away from prices. So the chances of success will be higher, and the yield will still stay the same. If you can yield 8% on money at risk in 2 weeks, 3 weeks, that's pretty decent yield in my book.
Okay, let's move on to some individual issues here. Facebook, ripping the shorts face off here, making an all-time high. Last 2 days in trading. Any top in sight here in Facebook?
Facebook, the way I said it, it's had like 4 or 5 really strong candles. It broke resistance and then moved on to higher levels. several lines of resistance, and the target, if I'm eyeballing a target from an uptrend, it will probably have some room to go. I started to build some debit put spread positions in it, just small, lotto style, little money to risk. And if I lose it all, so be it. It's kind of a lotto ticket. You buy it. If it doesn't work out, oh well, you tear it up and you move on. I can't go against it with a credit call spread because of the momentum it has, and it was based on some fundamentals. I think it was some sort of a payment method or something like that. So I don't short fundamental rises. I short pops that are frothy. Like last week, we had a pop on something bad not happening. No rate hike in April. Yay! Let's all buy the market. That's a frothy pop, a relief pop. But if there's a change in the fundamentals, and if Facebook is going to have another stream for income, I don't want to short that. I want to kind of like take a shortish position in it to see if it works. If it doesn't, I'll just move on, call it a no-go. So I wouldn't stand in front of it too hard. But if the market in general turns, it's going to turn with it. But as a fundamental short on Facebook, I wouldn't do it right now. It might have another dollar or two.
What about Netflix here, Nick? Are you looking at Netflix? We got a couple price target raises here from Barclays and Cantor Fitzgerald here today, and it is trading up about 5 points here in the pre-market. What do you think about Netflix?
Netflix has been struggling with this area between 415 and 435, 438, thereabouts. And it could go either way. And if it's up today, it's at the upper end of this limit. I wish I could share that chart with you. But I'm scared because of what's below. There's that big open gap.
Yeah.
And it's too choppy. It's easy come, easy go with this name. So I would be very careful going long it big time. And if I am long it, I would probably protect myself somehow. Either sell some calls against it to put them to work a little bit, generate some dividends if I can, if I have enough shares, or buy some cheap puts to ride out some iffy periods of time. Like if we were worried about the CPI coming in hot this week, because that's really the trigger for the Fed. It should be, but they're ignoring it for now. I would probably protect myself somehow. I know people put stop losses in there, but I'm not sure they work all the time. You might know better than me, but the way the stop loss works, the first trigger is it turns it into a live order, but if it, who knows where the second tick happens.
Stops, yeah, it depends. Obviously, if I've always just been a fan of watching your stock not having stops out there, because I always hate that when it becomes a market order and you never know, especially if you're trading something thinner.
For example, Friday on Apple. How many people got screwed up with that?
Oh, I bet you real bad stops. And what did you think about that Friday? That was Apple sell-off was pretty incredible. We had a huge sell-in balance that came out there just at 350, and they just came and started bashing the stock. And I think it was over 3 million shares to sell in the close. And we were expecting, a few fireworks there because last March of 2014 there was some major fireworks on the close there on that options expiration. So it's a big one there near the end of the quarter too. So not shocking that there was some movement, but that was a big sell-off in Apple.
I called it the fry crash, and it's funny because I was in my chat room with my guys and gals, and I sent out a note. I said, if it loses this level, I forgot what it was, 127.50 or something like that, it can whoosh down. Like minutes later, it goes whoosh all the way to 125 and change. It was like, whoa, I did not think it was going to whoosh that far that quickly. But the market makers sure, lowered their losses by, killing a whole bunch of call options that went worthless right at the last minute. So, it happened again yesterday to a smaller degree. At the end
of the day, we had a little sell-off, yeah. And everything at the end of the day.
Nick, what do you look at during the day? I mean, I know you sent me some of your charts, your longer-term stuff, and I keep a long-term perspective. What do you have up on? What's up on the Nick screen there?
I look at the ES, at the NQ and the TF to watch the S&P, the NASDAQ, and the small caps. And first thing this morning, I see that the futures are up. So I looked at the fact that the S&P and the NASDAQ are up, 0.2% or something like that, whereas the small caps are flat to a little bit red. So they're a little hesitant. So I don't not to chase one thing without looking at the other. I also look at oil these days, and I look at some ticks, and I also look at a few stocks in front of me. Apple is here, Google's here, Priceline's here, Tesla's here. I pick, and Facebook is here because every week it's a different canary. Yesterday, a couple canaries I picked at were Facebook and Tesla, and they were a little red in the morning. And I said, okay, if they turn around, the markets might have a chance. But then they traded away from the market, and so did GoPro. And so I pick a few canaries and I put them up on my screen. But I have my staples on there. I look at the TLT and the TNX to see how and some currency stuff. So obviously, the more things you watch, the better overall picture you get. And oil is like almost meaningless at this point because it is a rigged game. But yesterday and this week, it's had bad news, and it still didn't go down hard. In fact, it rallied. So maybe, just maybe, the rhetoric doesn't apply to it anymore, and maybe the fundamentals are supporting it. And so maybe now it's about the trough area of oil prices.
What's the shortest time frame that you look at on those charts?
All these are 1 minute charts.
Ooh, that's tough. Okay. How long could Twitter stay in this range?
Twitter has, I just downloaded let me look at the chart. I haven't traded it recently. Every time it hits 50-ish, it hits like a wall. And if I had profits in Twitter, I would book them right here. Not because of Twitter itself, because I'm looking at the price action in it. And the open interest in here, it tells me that actually for Twitter, Netflix, and Priceline, all of these momentum, they're at resistance. So they will need a reason to run from here. So 48 in Twitter is a start of very small resistance, but 50 is a big time resistance, relatively speaking, for this week in Twitter. So why would I want to hang on to profits at places where it has more chances of falling than rising? So if I have a profit, I book it. This has been my motto for the last year because of the lack of conviction. Yeah, if you remember 2 years ago, the 2013, it was all-time high after all-time high after all-time high, but it was conviction. It was buy the effing dip, period. Everybody was buying every dip. Now it's no longer the case. So you cannot hang on to your greens too long because they might not be here the next minute or the next day. That's why leaving money on the table, it sounds like it's wrong, but it's the right thing to do, even if it's not the perfect thing to do.
Nick, have you been watching this gold rally here? Because just quietly in the last week, we've rallied almost 50 points in gold. And everybody kind of had it for dead there a week and a half ago when it started to break down and it looked like it was going to make new lows. And no, not so fast. And we've rallied 50 points here. What are your thoughts on gold?
I thought gold bottomed a couple of months ago, actually in November, and oddly enough, this is exactly the same area from which it bounced back in November. There's no reason why gold should fall off a cliff forever. I mean, everybody knows it. We don't have enough of it, and it's getting harder to get it out of the ground. Why on earth should it be falling? It's beyond my pay grade. It's tied to currencies. It's tied to how the central banks are putting their fingers. Everything is artificial to a massive scale. So nobody really knows what's going to happen when all of this starts to unfold. By all of this, I mean, have we ever had a situation like this where all the central banks, they're all fighting each other down with their currencies? I really don't know the implications from the currency to growth to gold to rates. This is just beyond I think, most experts, but they don't admit it. I can admit it. I have no issue. It's coming up on closing a gap. I think 115 would have closed the last gap, open gap for gold. So is it too late to jump on board? Last time I jumped from here, it still had a few bucks from here, so we'll see.
Nick Alibaba. I mean, this thing is like a yo-yo. It should be called yo-yo instead of Baba here. It looks like
it's a heartbreak.
Yeah. What do you think here? Is the low in?
One would think because that lockup went, right? It expired, it's gone. Yeah. So last couple of candles were red. It will have resistance if it continues up somewhere on 90. In the open interest, it does have resistance. Baba, let me check where it is. It has a magnet at 85. So the magnet can move it up towards that line. However, in this case, it will probably be resistance more than actually anything. And then anything higher than 85 is resistance this week, just like a lot of momentums. So it's a heartbreak. I thought I could test a little long in it. I took some longs in it. They're not performing that well. I just took debit call spreads, and I wrote it off. I'm not going to do anything with it. I used to think it was a slam dunk long-term play. However, now every couple of weeks we have some blurb about something going on with Alibaba. So I want a little confirmation that it's on the up and up before I recommit some long money to it.
Give us one more stock pick before we get off here. What is on your radar here for today, Nick?
I'm still looking to fight Google on the short side. It looks like it's got some resistance that's clear this week, so that's one of the clear resistant things. So credit call spreads in Google, if for the active traders, maybe generate some income that way. And Tesla is looking like it wants to break out from here. I shorted a little bit like Facebook via debit put spreads. They're a little underwater there, but I haven't given up on them yet. Nothing too big. And the indices. If we're going into earnings season again, I usually shy away from trading the individual stocks because of the earnings coin flip effect. You cannot go full bore into full position into an earnings season because really you don't know how the market's going to react to the numbers, regardless of the numbers themselves. So I trade the indices. And I am building bearish positions longer term and higher up. I'm giving the market 5 to 10% room from here. I collect 8 to 15% in potential yield if all the credit call spreads work out. Then I'm going to do some put calendars and just wait for the pullback. It's going to happen, and if it doesn't happen, I give it room so I don't get hurt. That's the best play on the market I have right now. It fits with my overall macro thesis, and then I find some micros, but until we get out of the earnings season.
We've been on the line with Nic Chahine. He is the author of Create Income with Option Spreads. If you'd like to learn more about his product, check it out on Marketfy.com. Nick, thanks a lot. We enjoy having you on the show every Tuesday. Have a great trading day. We'll speak to you soon.
You too, guys. Pleasure.
Thanks, Nick.